Hello investors and traders, today we'll check the Intel quarterly report for the last quarter. We'll check the technical and fundamental parameters. So let's start from the investor presentation. It's the fourth quarter, the last quarter that the company reported. It's the CEO of the company and the CFO. So here in the presentation we can see that it starts with the industry outlook, the volatility across all markets. We see that the company expects volatility, but in the other case, long-term sustainable demand they see for their products. Except this, the financial highlights, of course, revenue 14 billions was last quarter. It's 28% down year over year, and gross margin only 43%. Also, it's down more than 12% year over year, and EPS is very low. It's maybe it's can be it's near near the losses, and of course it's down more than 90% year over year. And of course the full year financial highlights: the revenue is 63%, gross margin is 47%, and EPS also down. So we can see all the revenue, gross margin, EPS, all the parameters on the financial statements are down. So it's bad signs. And let's move to the sectors. So the revenue, client computing group, it's the sector that it's the core sector for Intel. It's from this area come the main revenue for this company. Of course, here we can see revenue down 36%, only 6.6 billions, and operating income also very low. Look, it was the operating margin was 37% 1 year ago, and now it's only 11. So where the marginality is decreasing, very bad sign for investors. And the second core revenue gainer, data center and IE group. So also here the revenue down, and the gross marginality also is down more than 80%. The other sectors we see the revenue down, net income, operating income in down. But here we can see other businesses. For example, while one of them for me is very interesting is Mobileye. The revenue up 59% year over year, and the operating income also up. It was I think a few years ago the IPO of Mobileye. It's Intel subsidiary. So here we see the revenue and operating income, both of them are improved. So it, of course, in the general picture, it has no high influence, but anyway, maybe something positive. The outlook of the company, the revenue for the first quarter of 2023. So they see the revenue about 11 billion, gross marginality less than 40%, and DPS, by the way, they expecting loss on this quarter. So it's very negative and very bad signs for traders, for investors, that the company telling you that we are expecting in the next quarter to show a loss in our financial result. EPS, I remind you that earning per share. So it's we're taking the net income of the company that it's earned in this quarter, and dividing by all the shares that are now traded in the market, and we receive the EPS parameter. So here what we see, that the revenue, that the gross margin, EPS, all of them are down significantly, the expectations for the outlook for this quarter. So for me it's I'm not impressed. Let's have a look also on Intel consolidated statement of income and other information. So here we can see that the revenue, it was 1 year ago 20 billion, now it's only 14. Also, let's have a look on the net income loss. We see that this quarter it's really loss. If it was about more than 4 billion 1 year ago, now it's less than 0. So it's a loss. So very bad pictures I see. So from all this revenue that the company earned, 14 billion. There are a lot of expenses. We can see that cost of sales is about 8. Also R&D very high. The interest payment. Yeah, here are the interest payment, and it's finally it's unfortunately the company showed a loss. And also one interesting thing I showed here. Let's have a look on the debt. Yeah, here the debt is increasing. Yeah, we see that the total debt, it was 33 billion, now it's 37. Now we are in an area of increasing interest rate. The Fed continue to hike its interest rate, so I think in the future quarters it will be harder for Intel to I think of course it's not a huge problem, but the interest expenses will be higher in this year, much higher than the last year. It's also another problem. And another point I would like to mention, check here the net cash provided by operating activities. If one, here you go, it was about 30 billion, so now it's only 15 billion. So the operating the core activity of the company, it's decreased twice. Of course here we have investing in property, plant and equivalent. The company, maybe it was new plants, new technologies, but anyway the operating cash flow from operating is decreasing significantly, and this one I don't like this position. So let's have a look on Intel chart. It's a monthly chart. So here in my mind, by the way, the reaction on the report was the stock was 6% down last trading day. So what I see here in my mind, it is an impulse. Yeah, the first wave, the second, the third, the fourth, and the fifth. Now we're in the first wave, and most probably here we have ABC move. But here the C wave may not finished. Can be finished on maybe 14, 15. So in this case we have another potential of decreasement for Intel, about 40%. I'm not sure it will happen, but generally the expectations, the outlooks, and the marginality, decreasing the marginality, telling me that it may be happen. But still, now the stock is already oversold. Maybe we may see a bounce from these levels, but anyway the report is very disappointing because of course, look, now the dividend yield is 5%, yeah, but the quarterly, the marginality is decreasing. Yeah, last quarter is of course was very disappointing. And by the way, the revenue, we can see that we have a data for 5 quarters is decreasing, because the revenue was 20, 18, 15, 15.3, and now only 14 billion. So the revenue for this company is decreasing, and of course the marginality, it's the orange line, of course, also decreasing. So if I will save my opinion about dividend yield, yes, of course, by 5% it looks cool, it's interesting, but the business model itself is I'm not sure it's so safe, because Intel of course has a lot of competitors like AMD, like TSMC, Chinese companies, a lot of chip makers. So I think it may be a very tough year for this company. So now I'm not buying this stock. Of course, 5% dividend yield, it can be interesting, but we see that the financial results of this company and the marginality decreasing. So of course, I'm as a value investor, I don't like this stock now. So if you like this video, press the like button, don't forget to subscribe to my channel, and have a nice day. Bye.